Hey, this is David Miller with the Miller Group of Keller Williams Realty. I'm here to help you get real estate smart. All right, the new real estate came out for July and woo, was it hot? Let me tell you. So let's start off with inventory. Inventory for the 7th month in a row went up 3%. So we have over 11,000 homes on the market. It hasn't been this high since November of 2015. So that's about 9 years ago. What's going on here? Interest rates have been high, and because of that, homes are unaffordable, which means there's less demand. If there's less demand, that means that less houses are being sold. So that is why inventory is going up. Now, if we do look at new listings, they're actually down about 2% from July to June. And that's really because of seasonality. If you think of seasonality, the summer selling season is the hottest time of the year, literally, to have your house on the market. And keep in mind that school started already, so it takes about 30 days to close. So usually by the middle of July, it really starts to slow down, and we definitely saw that from a listing perspective. Now, closings are actually up 2% versus last month, which is expected. Remember, summer is the busiest time of the year. So this is really good news. Now, what we're seeing is pricing has dropped, okay? Pricing has dropped 1.3% versus June. If you remember last month, I talked about what I expect to have happen. If the rates stay high, inventory is going to keep on going up. And as that happens, those sellers lose leverage and the buyers gain the leverage. So we're starting to see that. Matter of fact, we're seeing a lot of price reductions off the list of prices. And number two, 20% of homes that went under contract last month actually fell out of contract. And that's a very high number. Actually, we led the nation in that area. So why is that happening? Well, a lot of times that happens during the inspection process. And I think a lot of buyers are just sort of second guessing themselves. What's the good news? Well, the good news is that 2 weeks ago, we received some bad news concerning the economy, and because of that, the rates dropped a lot. They were bouncing between 6.8 and 7.2. We're now around 6.3, 6.4, 6.5. It really depends on what it is. And I know I've been saying this for the past year and a half, that there's a recession coming, but I really think we're starting to see some signs. The federal government's goal is two things: to have inflation no higher than 2%, so we're still not there, but we're getting pretty darn close, and not to have unemployment higher than 4%. Well, unemployment did go up, and as we get closer to that Fed is going to be pressured into dropping the rates. Remember, that is not a direct correlation to our rates. However, it does have some correlation enough where our rates go down lower before it actually goes down, and that's what we saw. If you have any questions, need any help from a buyer or seller perspective, please let us know. We'll be glad to help you out, and I hope that you are now real estate smart.